In Signal episode 10, we explored three-layered strategy and compared financial planning models between India and Australia in a cricketing style. This week, we are switching fields from the stadium to the studio. Because while cricket is about timing and temperament, constructing a portfolio is about rhythm and structure. So, in Signal episode 11, we'll take you through market highlights, strategy of the week, story of the week, or should I call it studio of the week, finally wrapping it up with quote of the week. We'll be taking break next week and we'll be back with Signal episode 12 on 26th October 2025. Welcome back to Signal, where noisy markets meet simple, sharp and sound insights for long-term investors. The Sensex closed at 82,500 points, up by about 1,293 points from last week's close. The Nifty settled at 25,181 points, gaining about 287 points from last week's close. Sectoral performance was mixed. IT and FMCG showed some softness after select quarterly results, while banks, autos and energy provided strong support. Mid-caps and small caps continued to display resilience, contributing to healthy market breadth. Foreign investors remained cautious with modest activity, reflecting global risk sentiment and US rate uncertainty. Meanwhile, domestic institutional investors continued to step in as steady buyers, cushioning volatility and keeping the momentum intact. The rupee ended near 88.77 per US dollar, holding steady thanks to softer dollar cues, crude prices and periodic RBI support. Overall, another constructive week for Indian equities. Steady domestic flows and selective sector rotation kept markets hovering close to lifetime highs. And where to from here? Markets, much like a well-tuned orchestra, may take a brief pause before the next movement begins. The melody ahead will likely be dictated by earnings tempo, global trade cues, and domestic flows. Some see it as consolidation, while others see it as opportunity. The real answer depends on your rhythm. So tell us, what's your beat? Cautious, balanced, or bold? Do let us know in comments. When A.R. Rahman composes, he doesn't start with pressing random keys on a piano. He starts with silence, structure, and a vision of how every instrument will come together. He layers rhythm over melody, emotion over precision, refining, tuning, and perfecting until the entire composition feels effortless. But behind that harmony lies days and hours of planning, balancing, and fine-tuning. And that's exactly what a professional investing is like. The end result may look smooth, but it's built on countless cycles of planning, executing, re-evaluating, re-executing, all well orchestrated in structure, process and purpose. And here is what professionals do differently. They don't start with products. They start with a plan. Because a professional portfolio is not built by excitement. It's built by deliberate engineering. Professionals begin with their asset blueprint, defining clear allocation ranges for each asset class. Equity for growth, debt for stability, gold for inflation protection, international assets for global participation, real assets or REITs or infrastructure funds for income, and sometimes a very small sleeve of say 2 to 3% in innovative and digital assets like Bitcoin or blockchain based ETFs. They have the insight, intelligence and understanding that 80% of their long-term wealth creation or returns will be engineered through the way their asset blueprint is allocated. So whether it's a simple 70:25:5 mix of equity, debt and gold, or globally diversified 60:25:10:5 blend of equity, debt, gold, international and alternative assets, allocation remains the true foundation of every professional portfolio. Even the strongest foundation needs flexibility. Diversification acts as the shock absorber that protects a portfolio from unexpected market swings. Professionals apply this principle with intent. Within equity, they diversify across large, mid, and small cap segments to balance growth and stability. Within debt, they spread their exposure between short-term funds for liquidity and dynamic funds for flexibility. They allocate gold as an insurance asset, a safeguard that supports the portfolio in uncertain times. They add global funds not only to access international companies, but also to diversify currency, because currencies are assets too. When the rupee depreciates, the dollar-denominated assets can appreciate, creating a natural hedge that helps maintain the balance. Some global funds are designed with that inbuilt currency hedging, allowing investors to participate globally while keeping currency risk in check. Professionals don't set and forget. They review and rebalance. If equity runs too high, they trim. If it dips, they add. It's like checking tire pressure before a long drive. Small adjustments that keep the journey smooth. They also know what not to touch. They never let emotions drive their decisions. They focus on substance over sensation and structure over stories. And that's what turns a random collection of funds into a coherent and well-balanced portfolio. So the next time you're tempted to add a new fund, pause and ask, is this strengthening my structure? Because true wealth is built by designing your portfolio like a professional, with balance, breadth, and belief in the process. For Story of the Week, let's walk with Shilpa. Every morning, Shilpa steps into her music studio, calm, deliberate, and focused. Before she plays, she listens. To the silence, she sketches the outline of her melody, how the rhythm will rise, where the harmonies will breathe, and how each instrument will complement one another. Then she begins layering softly. The drums don't overpower the strings. The piano doesn't drown the flute. Each sound finds its space, its balance, its purpose. Hours later, when she plays the final composition, it feels effortless. But behind that effortless flow lies structure, process, patience, precision. She didn't rush, she composed. And that's how professional investing works. Design first, discipline next, harmony follows. Not every investor works this way though. Some, like Mohini, jump straight into the music, adding sounds that feel right in the moment. It's vibrant, yes, but fleeting and ephemeral. Shilpa's track endures because she built it with balance, precision, and purpose. For Quote of the Week, let's listen to music maestro Sir A.R. Rahman. The idea of music is to liberate the listener and lead him to a frame where he feels he is elevated. And that's exactly what professional investing aims to do. It liberates you from noise, from emotions, from chaos of reacting. It elevates you towards peace, clarity, and peace of mind. Because when investing is approached like a composition with balance, precision, and purpose, you just don't create returns. You create rhythm, stability, and freedom. Professional investing is a composition. If you think you can compose it, then compose it with structure, patience, and purpose. And if you're not sure of where to begin, then get help from a SEBI registered investment advisor who understands the rhythm, the balance, and long-term harmony. Because even A.R. Rahman had Dhanraj Master and Ilayaraja. Every masterpiece begins with a guidance, and every great portfolio with a professional advice. We are building a strong community of pragmatic, progressive, and persistent long-term investors. If you're one of them, why not like and subscribe us and tell us in comments. If your portfolio was a song, what would it sound like?